help me welcome Ms. Darlene Hawkins. Thank you. Good morning. I'm Darlene Hawkins. As Nicole mentioned, we work together at UNM Hospitals. Financial management and accounting has always been my passion. Once I retired, I was able to work more closely with the chamber. I handle the accounting for the chamber. Also have a small business accounting firm as well. So what I want to do today is just kind of talk to you a little bit about basic accounting for small businesses. You know, as a small business owner, you wear all the hats, right? And so any day of the week, you've got 10 balls in the air trying to figure out what you're going to do next. And a lot of times, the accounting is the one that doesn't get the attention that it deserves. And unfortunately, not keeping track of your accounting or your cash flow can be the thing that can bring you down before any of those other ones. So I just like to keep it really, really basic in terms of what we're going to talk about today. And then, you know, keep it more conversational than the presentation. So if you have questions, just feel free to ask them. We're not going to have a formal question and answer at the end. Whatever you have, we can deal with at that point. I just want to make some things, share some information with you that maybe can help you in your day-to-day. So again, I work really closely with the chamber. I just wanted to plug a few of the programs that we have going on right now that could be of interest to you, that you could benefit from. The first one is our Small Business Success Program. And in this program, all you have to do is be a member of the chamber. When you're a member of the chamber, you just fill out an intake form that can be found on the website, which is referenced there. And what we do there is we're able to offer some resources to you, one of them being some accounting assistance. We can do that as well. We can offer the services of trying to get you up on the web, get you some web presence. We have a contractor that we work with that can help you with that, as well as if you want some help with your business plans, help with certifications, we can do that as well. So again, all you need is just to be a paid member of the chamber. Go online at that web address and pull down the form, and then you upload it from there as well. So go ahead and do that. That's a good opportunity for you, and a lot of people have taken advantage of it. The next thing we have are microloans. This is something that we just started in the last few months. We partner with Nucinda. This is a really good program. Again, you need to be a member of the chamber, but we're offering, the chamber is offering, partnering again with Nucinda, microloans anywhere from $250 to $10,000. You can go ahead and apply again and get more information at the website. It's an excellent opportunity. They use credit, but it's not a factor in terms of determining who gets those loans. It's 5%, which is an excellent interest rate. Again, the chamber administers it, but it is facilitated through Nucinda. So you would make your payments to Nucinda. They'd be the one that be taking care of that. But it's a good opportunity. So go ahead and go to the chamber website and look that up. And again, we take applications for those on an ongoing basis. So go ahead and look at that and get more information. We have grants. We just started doing this the last quarter of last year. This is such a good opportunity. You know, a loan is one thing, but a grant is something totally different. A grant, you don't pay back what your loan you do. So the only stipulations for these grants that we have is that you be at least 51% Black owned, your business has to be, and that your business be registered within the city of Albuquerque. You can go online again at the website and get your application. Now the thing with these, we only take applications the first month of each quarter. So we took them in January, we will be making awards in March, we'll start again in April, taking the applications. So we just do it that month. If you miss out, you have to wait until the next quarter. But again, this is a grant. And there's some stipulations in terms of documents that you have to upload, but it's a grant. So grants are really good opportunities, especially for small businesses, because it gives you some funding that you can use that you don't have to worry about paying back. So again, if you go to the website and look under the resources section, you'll see more information as well as an application. And again, we'll be taking applications again starting in April. So now we can get to the good stuff. So what I try to tell fundamentally small businesses is, even though it's you got to keep your business and your personal separate. And sometimes it's really hard because it's the same person. So you run into Walmart to get some supplies. I'm gonna get some milk, and then I'm gonna go here and get some paper for work. You need to keep those separate because that paper is a business expense, that milk is not. But a lot of times we don't take the appropriate business expenses because they get merged too much. So if you think about it, if it's somebody else's business, if it was somebody else's business for work, you wouldn't pay for that. You'd get a receipt and get reimbursed, right? So it's the same thing. We don't think about it a lot of times that way. And so, you know, paper here one time and pencils here another time and something else, it adds up. And what that means is that you've lost out on your business expense. So just think of it as somebody else's business, keep them separate. That also means having a separate business bank account. You need to do that. So anything that comes out in terms of an expense needs to come out of that business bank account. Now, if for some reason you do have some personal expenses that you use for business, you need to get reimbursed for those. So those become a business expense. So you really need to think of it as a business, however small it is, or however large it is. Think of it as a business expense, keep it separate. That's gonna help you at the end of the year as well to be able to separate everything for your tax purposes. Do you have any questions on that? So let's talk about budgets. Budgets are essential to having a healthy business moving forward. There's just no way, it's almost like this. If you walk into a room with the lights off, you can probably get around, you can bump around because you know where things are, but wouldn't it be a lot easier if you had the lights on? So a budget is gonna help you to be able to navigate everything. It's gonna let you know, forecast in terms of how much money you think you have coming in, how much is going out, and to be able to track that. And so that's where you have to start. Budgets are not set in stone. You can start someplace and then modify that as you go, but you absolutely have to have a budget. So you want to start with a budget, and then you also want to end with a budget. It's really that simple. They don't have to be complicated. You may have one line for income, 2 lines for expenses, and then another line for your net income or loss. So they don't have to be, they're not scary, they're not complicated. They can get as complicated as you need them to be, but you have to start somewhere. So some of the things you want to include in a budget is fixed costs like your rent, utilities, that type of thing. Any variable costs are going to be office supplies and maintenance, things like that. Unexpected expenses. So you want to have a line item for miscellaneous, because for sure things are going to come up that you don't budget for. You want to put that in that line item. Also for savings, because you know that things come up. So you need to have a line for savings just in case, kind of like an unexpected expense. And then an emergency fund. You want to have an emergency fund, again, for things that come up that you don't plan for. And then after you have your budget, you want to be able to track those expenses. So a budget is only as good as it is functional. So you can have a budget and never track it, and then it's not going to be helpful for you at all. So what you want to do is to go ahead and track your expenses. Again, it doesn't have to be complicated. You don't have to go and get a QuickBooks account. If for some reason you want to just put it on an Excel spreadsheet, you can do that. Basically, you want to track what comes in and what goes out. And so just think about doing that on a weekly basis, maybe on a monthly basis. But it'll give you something to tie back to your budget, but also to let you know, it'll take the temperature of where you are. Are you where you need to be, or do you need to be someplace else? This will help you to do that, but you have to track it. Sometimes it's ugly. Sometimes it's not what you thought it was going to be. And it's not the direction you want to go. But by tracking it, you're able to fix that in real time and get to a better place if that's what you need to do. Sometimes it's a surprise in a good way. It's like, okay, I didn't know I was doing that well, and maybe I can increase some of my line items, or in the other way around, you might have to decrease some of your line items to get to where you need to be. The only way you can do that is to track it. Don't be afraid of it. You know, sometimes it is ugly, but it's necessary. Do you have any questions? I know you have questions. Not yet? And then also, too, you want to monitor your cash flow. So cash flow it's the lifeblood of your business. You can't buy things without having money to purchase it. And I always say this, once you've established a budget, spend to your budget and not to your bank balance. So what a lot of people do is they'll call Bank of Albuquerque and they say, I got $10,000, that's what I'm spending today. You got $1, right? Because a lot of these things haven't come in, and your budget says you have $1, so you have $1. So don't get in the trap of doing that, because some things are late coming into the bank, some things don't come in for a long time, sometimes don't come in at all. So if you get in the habit of calling the bank every morning, good luck with that. It'll work for a little while, but not for a long time. A budget will allow you to get a true measure of where you are, not your bank balance. Does that make sense? Sometimes you get happy when you call the bank. You're like, I'm rich today, just for that day. Again, cash mismanagement is going to be a reason for downfall. If you're out there, I know it's important for you to do what you need to do to make your business successful in terms of your tasks, but you got to understand that cash is what fuels all that. Because if you don't have the cash to fund what your dream is, it's just going to be a dream and it could be a nightmare. So you really have to make sure that you focus on that cash part of it, because that's what's going to get you to the next level. So another way that you can make your cash flow healthy, you want to invoice promptly. So you go out there and you perform a service. Come back that day or the next day and invoice. It's gotten anymore where even from your phone you can invoice. Get that invoice in, because very few people are going to call you and say, where's my invoice? If you don't invoice, you're just adding time to what most people are not going to pay right away. So the quicker you invoice, the quicker you can get money into your account, again, to get your cash flow in a positive direction. You can negotiate favorable terms with your vendor. So sometimes they allow you to pay, you get a discount if you pay early. You might want to offer a discount to your customers if they pay. It's just, everything is a negotiation. But again, you need to know what's coming in, what's going out, and stay on top of that in order for you to have a healthy cash. Cut unnecessary expenses. So the way you do that is to, again, look at your budget. If you think that you're going to spend $500 a month for office supplies and you're at $750, what's going on? Was it a one-time thing that's going to make me be $750 this month and I'm going to fall back next month? Is it a new expense? Or is it just I fell in love with this thing I saw and I bought it and I shouldn't have bought it? So that happens. So what you have to do is be realistic. At some point you'll get to the point where you can get everything you want. I promise you'll get there, but maybe not today. So you need to keep an eye on your expenses, track them with your budget. It could be, is your budget realistic? If your budget's realistic and your spending is off, you got to see what the problem is. If your budget is not realistic and your spending is more realistic, you need to adjust your budget. So it's just a back and forth. You're the best people that know what your expenses are. And sometimes when you're doing your budget, you have an idea of the way things should be, but then as time goes on, it's a lot different one way. So you just want to keep on track. Because at the end of the year, you really don't want any surprises. You don't want to say, I wanted to make $1,000 and I'm in the hole $5. What happened? So you really want to be, if you want to, at the end of the year, your budget says you can make $1,000, you make $1,500. That's about right. You just want to keep that where you don't have any surprises. That makes sense? And again, I always talk about cash reserves. Something's going to happen. I remember my daughter was in high school, and they had to take a class. And then every month they had to pick into a basket and pull something out that was an expense. So they would pull out car, they would pull out the heater went out. So every month they had to try to fit that into their budget. And it's not wrong, because as much as we plan, there's always going to be something. There's always going to be, it could be something small, it could be something big. So you always want to have something. Sometimes you don't have enough in your emergency rainy day fund, but you want to have something so that you're not just out. So just to keep that in mind, something's going to happen. We just don't know. We don't know how much and what it's going to be. Financial statements. So financial statements are going to give you an idea of where you are. With the balance sheet, it's going to be any date, whatever day and time. So as of the end of the month, it's going to give you a statement on that. Profit and loss statement is going to be over a period of time. So what you want to do is monitor that. Now, you need to know what they are and what they mean. You have to. So when you go to a bank and they ask you for a financial statement, you have to be able to talk to that. It's just an accumulation of what you've done, your transactions over a period of time. You have to know. Sometimes you look at it and it looks like Greek, because they're just numbers that are put there, but you have to know. You don't have to necessarily prepare your own financial statements, but you have to know what they mean. So if you have an accountant that's doing that for you, when you guys sit down, you need to be able to ask them, what is this? What does it mean? How does that impact me? Because a lot of times as small business owners, we just say, I don't want to deal with that. Just do it. But at the end of the day, guess who's going to get in trouble if it's not right? You. So if you don't want to deal with it now, you're going to have to deal with it at some point. I say deal with it now. You don't have to have the full CPA knowledge of what it is, but just as a general knowledge, you have to know what that means. How much money did I bring in? How much did I spend? What assets do I have? What liabilities do I have? What equity do I have? And that's what's going to be showing you on your balance sheet and your financial statement. You have to know. I can't stress that enough. Because what happens a lot of times, and you've seen it, is people get in trouble and they blame their accountant. Okay, but what part did you play in that? You're not asking the right questions, or you're not asking questions at all. And look, you can trust people, you should trust people, but it should be a healthy trust. So yeah, I understand what that is, and you go ahead and do that, but if my name's on it, I have to understand what it is. Financial statements is something that you have to understand what they are, what they mean. Was that too harsh? No. Okay, all right. So let's talk about tax filings. You want to stay up to date. So we have some things that are due monthly. If you do your CRS, your gross receipts, that's due monthly. It can be due monthly, it can be due quarterly, it can be due semi-annually or annually. Most times monthly. And the thing about CRS, for example, you can pay it late, but why you want to give somebody some money they don't have coming to them? They'll gladly take it. But all I'm saying is just be on top of that. If it's due on the 25th, 24th at 11:59 is okay. You don't want to do that. But I'm just saying you're going to have to do it at some point. Go ahead and put that on your calendar to do it, and don't give anybody any more money than they have coming to them. And at some point, it's going to have to happen. The longer you wait, the more you're going to have to spend. So that's just for the state. You have your federal payroll taxes that are due quarterly. You also have estimate payments that are due quarterly and semi-annually at some point. And also you have your yearly tax filings and your payroll tax reports that are due. So just have a calendar and put that on if you're responsible for it. If your accountant's responsible for it, they should be getting that to you on a timely basis. But just be aware and stay on top of that, because the thing about tax, you're not gonna avoid it. It's not gonna. I don't know one person. Maybe y'all know somebody that has gotten away with not filing the way and out of jail. Let's put it like that. So you're gonna have to do it. Just embrace it. Get it out of the way. That's one less thing you have to think about. I would say just make that something that's a priority for you and very important. So. And then what you want to do too is plan for your taxes. So if you see last year you owed money and you're in the same type of situation this year in terms of your income levels, you might want to set a little money aside so that during the year, at the end of the year, you have that money to pay for the taxes, and it's not going to be an undue burden on you. If you're making more money, then you're going to need more money in taxes. So you just want to monitor financial statements, and budgeting and tracking is going to help you to do that. At the end of the year, you don't want to have a whole bunch of money coming back, and you don't want to necessarily owe a lot. So you just have to monitor during the year to make sure that you're in line with where you should be. Any questions? So I just put this little listing together to kind of give you an idea of where you should be on a weekly, monthly, quarterly, and annual basis. So if you look at your daily to weekly, that just depends on how much time you have. If you have time to do it every day, that's good. If not, probably once a week. You want to make sure you record all your transactions. Everything that you've done in terms of money coming in terms of money going out. It's pretty simple now because a lot of people don't write checks. So you can just pull your bank statement to see where you are. Go online to see what's going on. Is that in line, with what you thought it was? Have you used your debit card a few more times than what you thought, and now those are coming out? You can do that on a weekly or daily basis and get caught up. You want to file your reports, your receipts. A lot of people are using more computers, and so we don't have paper anymore like we used to. But you want to make sure those are in a place that you know where they are. And you can do that on a weekly basis or a daily basis even. You want to pay your bills. You probably won't do this daily, but you want to do it monthly or weekly to make sure that you stay on top of where you are in line with your budget and make sure that you don't have any past due bills if you can help it. You know, sometimes you got to rob Peter to pay Paul, I understand that, but you don't want to sit on any bills unnecessarily that you can pay right away. It just gives you one less thing to have to think about it. So you can do that on a weekly or a monthly basis. And again, invoicing. Like I said, very few people are going to come knock on your door and say, I owe you money. So you got to make sure you're on top of that. And then once you invoice, you start the clock. So the sooner you invoice, the sooner you can start the clock, the sooner you can get your money. So monthly, you want to reconcile your bank account. That's really important because, again, you may have some expenditures that you didn't realize you had. You forgot you used your debit card. Some things came through automatically that you didn't realize by Reconciling your bank account on a monthly basis, that'll keep you straight. Could be some bank errors. They charged you incorrectly. They charged you twice. They made a check come through twice. The way you figure that out is to reconcile your bank statement on a monthly basis. If you use QuickBooks, that's what I use. They have a really good tool there that helps you reconcile. Again, it just makes you accountable for the things that went out and the things that are coming in that match your books with the bank. Again, you want to look at the people that owe you money. Are they up to date? Do you have to do some digging to make sure that you get your money from them? So that's something you want to do on at least a monthly basis. Run your accounts receivable aging report, and you'll see who's current, who owes you money, and for how long. And then just make a phone call. Sometimes maybe they didn't get your invoice. Sometimes they're just sitting on it waiting for you to call them. So you need to do that on a regular basis so you can get your money. Again, that's going to impact your cash flow. And then you want to make your tax payments. Is it a weekly thing? Is it a monthly thing or quarterly? You want to make sure that whenever those are due, that you do that, because again, you don't want to get in a situation where you owe money, penalties and interest. It's just money you're giving away, and you don't want to do that. Quarterly. So if you're doing your 941s, your federal payroll taxes, those are going to be due on a quarterly basis. You get with your accountant, or if you're doing it yourself, or if it's in a program, go ahead and generate those reports and get them out. You shouldn't really owe anything on a payroll tax type situation, but you need to file those reports, so go ahead and get those done. On a quarterly basis, maybe a quarterly or maybe every 6 months, look at your financial statements. What do they look like? Are they in line with your budget? Are they in line with your expectations? If not, maybe you need to do some editing or adjusting to make sure that where they are is where you think they should be. Maybe you have some income that you didn't know at the first of the year that you anticipate that you can add to that. But again, at the end of the year, you don't want any surprises. That's the main thing. Whatever you see on your financials at the end of the year is kind of in line with what you started with and what you thought. The way to do that is to be able to monitor your financials on a regular basis. And then quarterly, if you have any estimate tax payments, you can go ahead and make those as well. Yearly, if you're doing your own payroll, you need to do your 1099s or your W-2 forms. And then you file your annual tax returns on an annual basis. What questions do you have about any of that? So my next slide is to let you know that maybe if it gets a little overwhelming to you, you might want to consider getting a professional to do all that we talked about for you. And I'll just tell you, it's completely up to you. Some people want that control and they want to do it themselves. Some people have the time to do it. But I just wanted to let you know that these are some benefits to getting somebody to be able to help you. This takes a lot of time. Depending on how busy you are, it can take hours and hours away from your schedule that you can be out there generating more money. So, you know, there's a cost involved, but you have to look at cost and the benefit. Is it worth my time? Is my time more valuable out in the field than sitting in front of this computer? Maybe, maybe not. So that's just something that you can look at to say, you know, I can save myself a lot of times. I can have somebody else doing this, and I know it's going to be right. I don't have any questions. It's just a personal decision, but it's just something I wanted to bring up. An accountant also will keep you updated with your records and finance, so you can, at any point in time, you can call that person and say, what does my financial statement look like? They should be able to be as current as you've kept them in terms of keep giving them information. And then it won't be something that you have to say, okay, let me see, make sure I entered that, make sure I did that. They can keep that up to date, and they can also advise you on what the numbers mean, where you're going, your forecasts, and that type of thing. So that's just another added benefit. They're going to also keep real detailed financial records for you. I can tell you I've had people come into my office with trash bags full of receipts and that type of thing. That's okay. An accountant is not going to, he's going to go through your trash bag for you and make sure everything is detailed and you're okay. So you don't have to worry about what trash is, you know, my office supplies receipts in. So that's just something that's going to give you a lot more, you're going to rest a little bit better at night knowing that everything that they have is detailed and you don't have to worry about that part of it. And then also too, what I also say too is when you have somebody doing it or when you're doing it right, it gives you a true picture of where you are. You know, everybody thinks their baby's cute, you know, and sometimes baby's not cute. And so somebody needs to maybe take care of the baby sometimes. And so, you know, that's what, when you do this right or somebody else does it, it gives you a true picture. You can have in your mind what you think you want to happen. You can have in your mind what you would love to have happen, but the numbers don't lie. They never have lied one time. And so what you want to do is be able to have a true picture of where you are. Again, an accountant can do that for you. You can do it for yourself if you do it correctly. But at the end of the day, when you walk into a bank and you have your financials, you want to be able to give a true picture of where you are, rather than saying, don't worry about the numbers on the page, let me tell you what I think. And then when you don't get out there, go now. So that's the thing. You want to have a true picture of where you are. Having good financials, having good record keeping is going to be what it takes to get you there. So these are just some things I came up with. I try to keep it real basic, really, really basic, because it doesn't have to be hard. It can get real hard, but if you don't start at the beginning, it's going to get hard before it needs to. Yes, ma'am.
What's the technical difference between an accountant and a bookkeeper? Someone has a small.
Yeah, so for mostly bookkeeping is kind of basic. You're basic. Not a lot of bookkeepers get into really tax filings or tax returns or that type of thing. So it just depends on what you're looking at. So you can get maybe a bookkeeper to get you up to a financial statement, and then you can take that financial statement and go to a CPA and then make into your taxes. Some bookkeepers do taxes. Some accountants don't do bookkeeping and only do taxes and that type of thing. So it just depends on what you're looking for. But you can't go wrong by starting with a bookkeeper. A bookkeeper is going to be less expensive than a full charge account. So it just depends on what you're looking for, how much involvement you want to be involved in, how much you want them to be involved, and then ultimately what you're looking for. If you want to stay with one person and end up doing your taxes, you may or may not get that with a bookkeeper, and you probably would with an accountant. No. Go ahead.
Is there any accounting systems that you would recommend besides QuickBooks for, for a single member LLC to start a person with a business owner, the employee?
Yeah, I'm just partial to QuickBooks because I've used it for so long. But anything like that, QuickBooks started off pretty cheap and they've kind of gotten expensive over time. So anything basic that's going to handle a basic business, I know there's a lot of them out there now. Any types of those programs would do the same thing. And so you might want to just kind of shop around your prices to see what your price range is and what they're offering. But accounting is accounting. And so a lot of times QuickBooks will give you a lot more than what you actually need where you are in your business, but you're going to pay for it too. So I would just kind of do some shopping around to see which one works best, kind of back into it with your budget. Em, did you have a question?
Basically, it's the same.
Okay, yeah. And like I said, you might want to start with Excel, with an Excel spreadsheet, and just start from there. And the main thing is that you account for your transactions, that you're accounting for and tracking them. It's a little bit harder on Excel because you have to put in everything manually that is intuitive in QuickBooks, but you'll get to where you need to be. So if you're not ready to really, right now have that expense, it's maybe something you can look, to the future too, but at least start with an Excel spreadsheet. Yes, ma'am.
So I learned that, and I just think it's important to say, I learned that I know a bookkeeper and a CPA have different responsibilities. So I learned that if you have a good CPA, your CPA will help you to scale your business. Your CPA will help you tell you, look, Tanya, you're spending too much over here. You need to stop this. They help you out.
They do.
But as long as we've been in business, I've never had anybody really tell me that until I got this really good CPA.
So Tim, there are people that do it. There are people that do it. Now you have a bookkeeper, you have an accountant, and you have a CPA. Not all accountants are CPAs. The higher you go up here, the more money you can spend. Okay? So, and a CPA, a lot of times won't do bookkeeping because it's not, they charge, it's going to cost too much. So, but if you get a good bookkeeper, they can help you. Because what they're going to do is they're going to produce a financial statement and it's right there. And you're going to compare that to your budget. And so it's about it's almost with everything. You got to get the right one.
Yeah.
You got to get the right one. And that's hard sometimes. But like I said, the higher you go, the higher you're going to spend. And you can probably get a CPA to do what a bookkeeper does, but you're going to pay 2 or 3 times as much.
That's what we have now. Our CPA does all that.
Mm-hmm.
So
does
I
our
made,
taxes and all.
They're out there.
Yeah.
I made that statement just to say that you can have a bookkeeper, you can have a CPA, you can have an accountant, but they all have different responsibilities, and it's important that as a business owner, you know what your expectation
Right,
is from
right.
them.
That's exactly
Because
it.
sometimes people will just take your money.
Yeah.
They'll just take your money.
They'd love to do it. They'd love to do it. And so you got to understand, you're in charge. So it needs to be what I need it to be. And if you can't do it, then somebody else will. And it's nothing against them and nothing against you. But I need you. You might want somebody that's going to do your bookkeeping all the way up to your taxes. You'll find somebody to do that. You may get somebody that you're doing some of it and you want them to do some of it. You'll find somebody to do that. You might find somebody that you say, I don't want to look at it. They'll take care of that as well. So you get to drive the bus.
And that's not a good idea.
It's
to
not.
Just say, because God has blessed us many years for us to just pay somebody to do our stuff, and then you don't have the knowledge of. You see what the numbers and stuff are, but it's like, being able to deliver your business business plan. You have to be able to explain that.
Exactly.
And know where you're going.
Exactly. And if it's not right, they're gonna come knock on your door. You can't tell them, oh, you got the wrong person. No, I got the right person. And so you have to be like I always say, you don't have to do it, but you have to understand.
You have to understand.
Now, I don't clean my house, but I can. Right? Okay, I don't want to clean my house, but I can. Okay, so the thing is too, you have to have an understanding of what it is. Because if you go to a bank, you're not gonna bring your accountant in there to explain that.
No.
Not all the time, maybe on a high level, but even if you do, you have to understand what's going on. How did you get to this point? What did your budget look like? How did you vary from your budget? And when you run these financial statements, you want to run a cost versus, actual versus budgeted financial statement. Because you want to see where you are. And you have to understand why there are changes. So at the end of the year, you thought you spent this much, you spent different, why? Why did I? And do I need to adjust the cost of the budget, or do I need to adjust my spending? And like I said, you got to get out of your mind what you think. It ain't about what you think. It's about what it is. Because you can go in there with these high dreams, and it don't matter if it's not on the paper. So you have to understand that. And there's a lot of people, I have a lot of clients that say, I don't want to look. I was like, you have to look. I don't want to know. It's ugly. It's real ugly, but it can get cute. But it's not going to get cute without you making some, So that's the thing. And so you have to have somebody that's honest with you, that you feel comfortable. It's almost like a doctor that you feel comfortable with, that's going to live up to the expectations that you have of them. And there's nothing wrong with that, because if that one didn't work, it's somebody right down the street that you can try. So it's not a shortage of people that can give you that. It may be a little burdensome to try to find that person, but that person's probably looking for you too, because not all business is good business. Because just like you have people you don't want, we say, no thank you. No thank you. So it has to be a give and take, and both people have to feel good about it. It's not about the money, because at the end of the day, it's not even worth the money you give me or it's not worth it, because it's not working. And what you're not going to do is say it was me. We're not going to do that. We're not going to do that. You have your responsibility, I have mine. And so it has to be a mutual. What else? What other questions do you have for me? Nothing? Okay, well, thanks so much. I appreciate your time. Again, please go to the website, and if you have questions about any of our programs, there's a number as well as an email address there that you can go ahead and use to get additional information. But we have a lot of programs at the Chamber that can help people in your situation in terms of small business owners. Thank you.